Hello. Welcome to my channel, my dear friends. My name is Abhilash and I'm a trader next door. In this video, I'll be analyzing the chart of gold USD for Monday. If you're watching my videos for the first time, you can subscribe to my channel for regular market analysis. So let's get started. So my dear friends, yesterday we got this move on the chart of gold. Were we expecting this kind of move? At least I was not expecting a fall like this. Yes, I was hoping for some correction, some retracement, but I was not hoping for this kind of move. My buy limit was around 1923, and to be honest, my SL was hit too. Okay, and this is why market is above everything. That's why nobody can achieve 100% accuracy in the market, and that's why risk management is considered as the supreme, my dear friends. You can see here gold drops, pulling prices down for the week. Gold futures ended lower on Friday, leading prices to an overall loss for the week, just the day after posting their second highest settlement on record, as investors with expectations that the Federal Reserve may soon halt its campaign of interest rate increases. And already I have expressed my frustration regarding all the drama of interest rates. That's why, to be honest, my dear friends, personally I have stopped trading, stopped swing trades. I have stopped overnight positions. I am simply focusing on day trades, and my targets are usually 40 to 50 pips only. As long as market is not stable, I will not touch swing trades. I will not be going for any overnight trades because totally I am frustrated, my dear friends. And hopefully you all are also kind of frustrated too. So this is the chart of DXY in front of us, and DXY showed a good recovery. Yesterday we talked about the support of 100.80, the last support of DXY, and DXY gave its best fight, and really DXY managed to survive above this level and close at 101.58. So the market opening will be very important for DXY, because right after market opening we will have to see what DXY does. It may try to recover. If it tries to recover also, then as we all know it very well, that the road will not be very easy, because DXY, my dear friends, okay, both fundamentally and technically it is weak. So as a result, it will have to cross a lot of resistances to go for a reversal or recovery. So 100.80 is still the support for DXY, and if it tries to go up, then yes, there will be multiple resistances. The first resistance will be around 102, then we have resistance around 103. There are multiple resistance on the chart of DXY. I'll be coming down on Monday to update you what are the next levels on DXY, but as of now, let's wait for the market opening to see in which direction DXY moves, because right after the market opening, if we see a big red candle, then yes, there is a possibility that DXY may break the support also. So market opening will be crucial for DXY. Before I proceed further, I would like to give a big shout out to Chart Prime, who have sponsored today's video. Those who want to generate their own buy and sell signals, please watch the video carefully, because Chart Prime is one of the best custom indicator in the trading world right now. With the tools available in Chart Prime, you can not only generate buy and sell signals, but also you can use these tools as additional confirmation in your analysis and take your trading to the next level. They also have a community on Discord where they post regular trading ideas. And my dear friends, probably you all have seen me talking about Chart Prime for the last couple of months. And my dear friends, trust me, their service is really awesome. My dear friends, as we all know it very well, that no tool, no trader, no company is 100% accurate, but with proper risk management and additional help from a tool like Chart Prime, you can definitely expect to earn some good money and change your trading completely. And to know about the functioning of these tools, you can simply go to their website chartprime.com, and under tutorial section you will find many videos. In case you are still confused about the functioning of the indicators, you can simply go to the Discord channel. You'll see that they conduct two weekly classes. In one class they teach about the functioning of the indicators, and in second class they talk about the strategies that you can use with the help of these indicators. So this is the 4-hour chart of gold in front of us, and as you can see that there are many signals generated by their tool market oracle. Possible reversal down means there's a chance, there's a possibility that the market will be going down, so you should go for a sell. Possible reversal up means the tool is saying that you should be looking for buy position. Possible reversal down means you should be looking for sell position. It may look like a magic, but my dear friends, again I'm repeating, no tool is 100% accurate, so proper risk management is extremely important. And prime oscillator is another powerful tool where you will see divergences. Those who know how divergences work, this will be very useful. I'm a fan of divergence. Okay, so this oscillator is a very powerful tool. Okay, and in addition to that, there are some other tools also, indicators like pattern detector, smart money concept. Okay, you can check them out later on. And the best part is the pricing. Okay, we can see that the pricing is very competitive in comparison to the other players. Okay, you can see that they only charge $57 per month, which is quite less in comparison to the other service providers in this category. Okay, at first you can simply try the tool for 1 month, and I'm sure you'll love it. Use the link in the description to get 30% discount at the checkout. The discount is available on monthly and quarterly plans only. If you're looking for discount on annual plan, please let me know. I'll get it for you from the chart prime. You can also scan the QR code on the screen for faster registration. Please check them out. Now gold closed at 2004. So my dear friends, if you are holding any buy position, any sell position, you can be on the trade, because right now market is kind of scary and it is very difficult to predict in which direction the market will be moving for the next couple of days and weeks. My honest confession. Okay, but if we look at the overall chart, then we can see that overall the market's trend is still bullish. I'm not talking about day traders who have a stop loss of 40-50 pips, traders like me. Okay, I'm just talking about the overall trend here, that the overall trend of gold is still very much bullish. We can see that market is still trading inside the upward channel. Okay, you can see here that this is the upward channel of gold. We have already discussed about it. So right after the market opening, we will have to observe in which direction the gold moves, because gold has already taken support around 1992 level. Okay, 1992 level, gold has already taken some support around this area. After the market opening, if gold starts falling, okay, if you see that after the market opening gold starts falling, observe the volatility of the market. Usually we do not get to see much volatility right after the market opening, but we have also seen some special Mondays where gold gets crazy, completely crazy. So nobody knows what are the news that are about to come out by Saturday or by Sunday. Nobody knows. During the weekend, if there is a big news, then market will be very volatile. If there is not much news, then market will go for a silent opening. So if we see a silent opening but market starts falling, then you can observe the market around the next support of 1983 to 1977. Why are we considering the support here? Because when market was falling, this was the level market from where market reversed, as well as we have Fibonacci when we are considering Fibonacci from this particular level here. So the first support on the chart of gold will be around 1982 to 1977 if the volatility of the market is low. Okay, we can expect the market to take support. If you see market taking support, you can go for a buy. But confirmation is important, and the confirmation will be a hammer. It can be good price rejection from below. Right now I'm in a 4-hour time frame. You don't need to look for hammer or confirmation on the 4-hour time frame. It is slow, so you can just move to a 1-hour time frame or 50 minutes time frame as well. Okay, And in case market shows good volatility and starts falling, then your next support, okay my dear friend, your next support will be around 1957, okay, 1957, 58 and 1950. This is a big support zone you can see here. Okay, we have a big support zone here, 1958 to 1950, a very big zone of 80 pips. Usually 80 pips is a TP, but sadly here we can clearly see that this 80 pips is a zone in the market because of previous price rejection around this area, as well as we have a good support here, as well as Fibonacci. And if we consider Fibonacci from here, then also we can see that we have some support around this area. So when market will enter inside 1950 857 level, do not take a sell position, just wait for the market, okay, to react. If you see the market is taking support and trying to go up, it can be 55, 54, you can go for a buy position with your stop loss around 1948. If you're planning to take a sell position on the chart of gold, then it would be better if you take a sell below 1950, because 1950 to 1957, 58 is support zone, means the number of buyers are quite high in this area. So taking a sell in this zone can be a little bit risky. Clear? So these are the two levels where we can expect the market to bounce if market shows a fall. One level is for low volatility and one level is for high volatility as of now. And if market tries to recover, okay, if market tries to recover, then day traders, okay, I'm repeating again, day traders can look for some selling position, okay, or some quick sell opportunity around 2020 and 2027. 2020 and 2027. These are the two levels where day traders can look for some quick selling opportunity if market reverses. Why day traders? Because day traders mostly trade on the hourly time frame and the 15 minutes time frame. If you see the market is struggling around this area, then you can look for a sell. I'm not considering Fibonacci 38.2% retracement level because overall we cannot deny that gold is still bullish. Gold is still bullish both fundamentally and technically, we cannot deny that. So as a result, I'm not considering Fibonacci 38.2. I'm just going for Fibonacci 50 and Fibonacci 61.8 for quick selling opportunity of around 30-35 pips max. Because after all, there may be a big sell yesterday, but if we look at the chart carefully and if we go by the news and all, then there we cannot deny the fact that gold is still very bullish. So if you're a swing trader and looking for swing trades, then considering the overall market scenario, you should be looking for buy positions only. This is my opinion. And day traders, be careful, follow proper risk management. Yesterday we have seen what happened. Okay, market can be very crazy. So as a result, do not gamble with your hard-earned money. Capital protection should be your first priority always. No trader can have 100% accuracy, so be careful, and risk management is the most important thing. So these are the trading opportunities that I see on the market right now. As I have already expressed that because of the ongoing scenario, I am not going for longer trades, overnight trades or swing trades. I'll simply focus on level to level trading only, because this is the best that I do. Okay, so it's high time for me to save my capital as well. Okay, bye bye, take care, have a happy weekend.